What's up everybody, Tom here with another video. Well, there's always that one giant bit of news that comes out each month, and we're about to see it this Friday. The question is, will it continue the streak that is now becoming one of those for the history books? We can see here, August 2021, 7 monthly win streaks in a row. Will we get past the 11? Stay tuned to find out more. All right, guys, well, here begins our market recap for the markets close 2nd of August 2021. And we've got a heat map up here for the S&P 500. Just have a look at which sectors were performing best. Straight away, you'll notice energy was the best sector. And throughout today's video, we will be covering off on oil, our technical analysis levels for the Nasdaq, S&P 500, gold, Tesla, AMC, and so much more, including the volatility index. But firstly, let's take a look at the indices and see how they performed. IWM, the Russell 2000, that was the best sector through the day, 0.69 on the close. And S&P, Dow, and Nasdaq all had those big mid-session sell-offs. Well, not big, but at least sell-offs. But they rallied very heavily into the close. Notice here, the Dow and the S&P rallied the most. So when we go and have a look at which actual sectors within those were doing the best, we had energy doing quite well, but we also had the interesting one here, utilities. Now, utilities is known as a defensive sector. This marks day 2. So this is 2 days now that we have actually seen the utility sector have strong performance in it. And because it's defensive, it can show us signs of Wall Street moving towards a bit of a defensive position ahead of a big news result. We have non-farm payrolls. I would have liked to have seen more across the board defensive moves here. XLV, XLP, XLU, all of those defensive sectors should have been up a lot more. They weren't, so it's not conclusive, but it is the type of thing that in the future you might want to look for ahead of key news events to show Wall Street's real hand. Remember, they can't really hide where they're putting the money because it will show in the indices itself or the sectors. I also want to remind people that we're in the month of September. Now, historically, if you look here at VIX over time, it does tend to spike or have an increased amount of range on it, or at least fear on it, or market volatility throughout the month. September into October can be quite a volatile period, as can Feb and March, and we certainly saw that with this year's action. So will it happen again? History says, yeah, it generally does. If we move over here to the DXY and get stuck into the technical analysis, I'm actually surprised it got through the 50. This was a key level of support, as we talked about. Now, why I say I'm surprised is because it's done it before the news event itself. Is this some kind of leak of data that's come out and people are really believing that? When you've got weak dollar, what that's telling us is that we've got stimulus to stay here for a while. Possibly it's a weak jobs number that is going to come out. And if it is a weak jobs number, that's going to put pressure on the dollar index. The dollar index moves down to the next support, being around that 91.84. And this is the second month in a row that we've seen a preemptive movement here in the DXY before the non-farms result. Very interesting. Not that common to preemptively move so large. Let's move over to gold. Now, gold didn't move. It stayed within its range. We still have that 1820 resistance. We still have the 1807 support. We're looking for it to break through that range. If we go down to a 2 hour, you can see very clearly the bodies, the massive little range that we've got in here. And we hope to see this break, because when this breaks, it'll bring gold, but also it could be good for silver. And we've got silver trapped up here. You'll notice the 2420 continuing to hold that resistance. What a beautiful level. I am excited for silver if we can break through. I hope we can, because it's been very, very slow and boring on these commodities. Take a look at this. We go back to July 2020, and this is what I warn people for with commodities. Sometimes they're not as good an investment as people think. Bitcoin, on the other hand, has done a lot, but silver has done almost nothing. And this is pretty normal. It does tend to have, big spurts, then does nothing for a long period of time. But you'll notice that 2420, we've got that hopefully coming in soon. Let's move over to a bit more of a fun asset class to be trading at this stage. It certainly had some better trades on it. We've got here oil, and we actually have an inverse head and shoulders that's just broken that right shoulder. So we've got left shoulder, we've got the head, we've got the right shoulder. We've closed above the 69.50, which was the important level there. And I think this is pretty key. This is basically the role reversal it's coming back down to. Next level, you'd have to think is 72, then 74 plus. So I'm pretty interested in oil here. I think this is a good zone, a good range. You'll notice that resistance is just fairly strong on the charts here on the 4 hour. It's also on the 8 hour, which is excellent. You can see the inverse head and shoulder on both time frames, something you also want to pay attention to. Could it be ruined by something like non-farm payrolls? It's possible, but it is certainly one of those technical setups that you've got to pay some attention to. We'll move over now to the stock market. We'll start off straight away here on Tesla. Oh, boring, eh? Every single time this thing gets up to 740 and rejects. 1 rejection, 2 rejection, 3 rejection more. If we close above, surely this thing's off to the races to the 775, you would think technically. This is not great. However, as we've seen, once you get past this, what that is it's Wall Street letting it through to the keeper. All the little nasty shorts that are here currently, which we'll take a look at, are going to reduce themselves. And at this point, you usually see that explosive move. So like we saw over here where you've got the rejections and then you've got that explosive move, I would love to think that it's going to be explosive if it comes through here. Because I know a lot of you Tesla guys and girls have been waiting for a long time for Tesla to come good. We'll move over to algo flow. Was that at least positive? Yes, it was. Near the close, you'll notice the algorithms, the nasty Wall Street algorithms, they started purchasing in. So the overall flow was positive into the close here. That's the green line for Tesla, while price wasn't. This discrepancy can be good for the next day open. Let's see whether it happens. Again, it's going to come down a lot to the non-farms numbers. If we're looking at flow heat map of options, a lot of retailers buying the $5 kind of strikes. We can see here a little bit extra puts sitting at 750, and then the next week, the next week, and the next week are overall negative in terms of the puts being there. But 730, 735, and 740, all okay strikes, much lower than they were at the start of the week. And again, I think it's price action that's really going to dictate this one. We move over to AMC. What's going on in AMC? Well, it did pull back to the 43. It found very minimal support there and moved up 1.5%. I saw a really interesting chart where it took the volume over the increased spike. So we had the volume over here, we had the increased volume over here, and you actually put them both together. It was somewhere on Twitter. Maybe I'll share it over the next couple of days. And really what it did was it brought them both together, and it showed that there was that initial volume spike that we saw, which I guess is this thing here. It then dropped off, and then it had those epic runs. So if the same events that happened here and here reoccur with the volume, with the kind of step-by-step process, AMC really could be in for a pretty epic squeeze. I know a lot of you out there are very excited about it. I think the technical bottoming, a lot of the things here technically look okay. I mean, you've got nice bottoming, you've got your strong resistances. We know 52.35 is the next level. We know after that it's like a 63. There could be some good stuff coming in here from GME and AMC if everybody chooses to do it. Was Wall Street with you guys yesterday? Yes, they were following along with the slight gain. Overall flow was positive and the price was slightly up. Again, just a nice little positive figure coming through there. Let's move over to the US 500. So we've had it trapped now for a few days. We've got that futures market here. You'll notice it has the long leg doji, then it has the rejection candle, then it has a little bit of rejection at the top, and we close every single time around that 45.40 to 45.50 zone on the futures. We've got the support here, which we've been buying off this week, 45.20. Coming into non-farms, anything can happen, but there's a little range there. And if we break to the top side, what do we expect? We probably expect that 4,600 to be a really big kind of price action movement that a lot of the market will want. We break to the downside, I feel like we're going back to 45 first or 44.80, something around there. Previous resistance, previous support, and a 20 moving average on the daily. So there could be some nice little range trades. As I've said, it's more about trading the smaller time frames here. There's no doubting this thing is in the longer term uptrend. We've talked about it plenty of times. The only way the bears really get full control of this market in correction is going to be a close underneath the 50 exponential. It hasn't happened in a very long time, and we're on the top of the trend range. Everything's pointing towards this being kind of the little bit of a small time resistance. However, we've seen it time and time again. You follow the price action, guys, and right now there is no reason to be bearish currently in the market other than the seasonals. Other than that, we don't have any price action movement there. Let's move over to the QQQ. Now, this market has been slightly weaker. We talked about yesterday, if you take the 2-day, you got a long leg doji. I'll zoom that in so you guys can see it. What a long leg doji is indecision. So you've got a high, you've got a low, you've got indecision in the middle. Both ranges, when you close above, you've made a decision to go long. When you close below, you've made a decision to go short, and you can trade accordingly. Now, we know 375 is the next support level for QQQ if it gets underneath. And if it gets above, well, you're talking usually about going to the actual Nasdaq itself and just looking for the next round number. So in this case, it would be 7 into 8 into 9 into 16,000. Every 100 will matter for US 100. I usually tend to go with the 200 point ranges, but this time round it hit 15.7. So every 100 points as it grinds out will be the big area. In the time of this recording, you'll notice it's at 15,614, and even the futures are showing long leg doji, and through today's range on the 2-day, another long leg doji. It has no idea what it wants to do before this non-farm payrolls. IWM, how's that looking? Well, that's actually been the best. It's moved towards the next level. 230 is the next resistance, then 233, which is the top end of the range. We know this has been range bound now for the better part of this year. So if you're trading IWM, good work. I mean, this was certainly a good area for it, but I don't particularly like trading this particular sector or index. I'm just not a huge fan of trading it, but either or, you can go and focus on the stocks underneath it when you start to see it rallying. Remember, these are the smaller caps, the 2,000 smaller cap companies, a lot of financials in there as well. What else do we need to look at? Well, we do want to also think about what's going on with Bitcoin. So it rejected again this 50,500, just cannot get above there. You'll notice it's falling off relatively quickly right now. Here it comes down. You've got that big rejection coming through here, a little bit of follow through. That's like a pin bar rejection. And all I'm looking for in terms of whether you want to buy the dips or not is going to be BTC shorts. I've mentioned this several times. If you've got the big whales increasing their short positions, you've got to pay attention. The other one that you can look at is ETH shorts, because Ethereum has had such a massive run on it recently. You may want to take a look at that. And that is starting to rise here. It's always been high, but it is starting to rise. If this gets out of control, when the market's coming down, you might want to pay attention to when this starts to switch. Follow the whales. Remember, we're like the plankton or the krill or whatever in the sea. The whales are coming in there, eating us all up. And you don't really want to be that one that gets eaten, unfortunately. It's just you want to be the one that's swimming behind that gets to live. And this, I think, is one of the better predictors of movement over the next coming days when it comes to the markets in the crypto space. As we mentioned at the start of this video, it's all about non-farms right now, guys. Non-farm employment change, unemployment rate. This is the one that everyone's looking at. We will be live streaming it. We'll start the actual live stream a little bit earlier for non-farms, so probably about 8:15 ET, which is going to be 1 hour and 15 minutes before the stock market opens in the US. Come visit us. This is one of the biggest bits of news of the month, and you should always come and check out non-farms. Sometimes it can be a lot of fun and an extreme event. I'm looking forward to it. I hope to see you there. Remember to subscribe if you enjoy the channel. Hit us with a thumbs up as well if you're enjoying the content, and thanks so much for your viewership. Bye for now.